Markets now, the Nigerian Stock Exchange is trading lower today after the Central Bank of Nigeria retained its benchmark MPR at 13%. Tochukwu Uzo, asset manager at Financial Derivatives, joins me in the studio to discuss the market and, of course, the focus on consumer stocks. Thank you so much, Tochukwu, for taking the time out to join us. Well, the markets had closed yesterday before we got the decision from the MPC, so the markets didn't really get a chance to respond to that, but we're seeing the response now. We're not sure, I was just telling my colleague earlier that we're not sure if the reaction, if today's trading is linked in any way to the decision yesterday, but what are your thoughts? Okay,
well, I would say definitely we're likely to have mixed reactions to the outcome of the MPC meeting. But we'll have to also consider that in the light of the performance of the market. There's a lot of inertia right now, and what the market actually needs is something significant, news or some jolts to get it off the ground. We saw a halt in 5-day rally, and then we had two days of consistent losses. But I would say, if at all we're going to have, if the market is going to react to the outcome of yesterday's meeting, I think there will be a combination of approaches. If you're approaching it from the angle of how much that will be potentially released into the system.
We're talking about the harmonization of the CRR.
Exactly. Okay. So over about 500 billion. You could also look at it from the angle of the banks themselves. How would this affect the profitability of the banks? So we're talking about, yes, private sector. We had the demarcation of the, yes, or discrimination as they called it, right? So it was 75% of public sector funds and 20% of private sector funds. But now you have the harmonization and all that. So, but if you look at banks that were excessively exposed to public sector funds years back.
That's a positive for them.
It's a positive for them.
More money on the table for them.
Exactly. But now you're looking at banks now that had high exposure to private sector funds, and then those banks will start complaining. So all in all, you would have a mixture of that. Now, if you told me the market picked up today, or yes, I would say what banks, and so I'll probably be looking at the banks that, of course, you just mentioned, public sector funds, high exposure to public sector funds. We're looking at some key tier 1 banks, and then so you will have that switch. But I think it may be too early to call. So let's just see how the market closes today.
The idea behind it, I mean, the central bank governor yesterday said he was worried about the fact that, I mean, there wasn't enough liquidity in the system. At the time that decision was taken, perhaps it was a good one, but now that the time has passed, it doesn't appear to be working as good as it did back then. And so perhaps he's just hoping that, look, now that there's more money in the system, banks can lend to the economy. We can see more broader lending and, encouraging some sectors. But what is a guarantee that those monies will find their way to those much needed hands or people or sectors that need it?
Okay, that's a major challenge. You cannot ensure, there's no sure-proof way of ensuring that banks would actually lend to those key sectors that require these funds. If you take, for example, the performance over the past quarter, we had an increase in some cases, interest income and all that, but which also blunts or shadows the fact that a number of sectors were not, did not have a good number of these funds or these facilities available to them. So I don't think there is a way to ensure that. But then again, if we're talking about this easing we've talked about, if yields are likely to decline, for example, and then you have your treasuries or bonds a little bit, let's just say slightly unattractive for banks.
Because there's also the danger that banks may go, park all that extra cash, to make cheap, quick money from off government securities.
So that's the thing. But so you see, it's also a challenge because banks also may not want to lend aggressively this time of well, we know that we're changing administration in a number of days, and then they are going to have policy reforms and a lot of changes. So we just want to observe and see.
So in the meantime, lending could be slow.
Exactly.
Banks are not, even if they have all the extra cash, they're not going to be in any hurry.
And they're also watching their NPLs as well. So that's it. So we might see a slight increase in lending, but we're not going to see any immediate reaction. So we'll take it piece by piece. So I would say in the short term, we might not have any major or significant impact, but going forward, most likely we will.
Okay. Now, last point on the MPC, the CBN governor did say that the MPC is approaching its monetary tightening limits and is hoping to begin to see complementary fiscal policies obviously from the new government. But we know that, I mean, the new government would need time to settle down, properly articulate its policies to the public and, of course, to everybody who needs to know. And so, I mean, the next MPC and 2 MPCs down the line, what are you expecting? Because the message appears to be, look, we perhaps cannot increase the MPR higher than 13%, and we're not too keen on touching or tweaking the CRRs any further. We don't know what other administrative tools they can use at this point, but that's not the message that they're giving to the markets. So, I mean, how do you see this playing out?
Well, I think you're right when you say definitely there has to be some work done from the fiscal point of view. And I'm pretty sure the incoming administration is doing a lot on that, looking for areas, cost savings and all that. And then definitely there will be some belt tightening and looking for areas where we could plug leakages. So that will come. It will take a while. But the CBN, or the Monetary Policy Committee, over the next few meetings would also have to do its own part. So I'm hoping that in a few months, we're looking at maybe third quarter, we'll begin to see, fourth quarter, we'll begin to see a number of those changes, and then...
Because by then their backs will definitely be against the wall. But again, I guess we'll have to see. But thank you so much, Tochukwu, for talking to us, giving us a better perspective on that. That was Tochukwu Uzo, Asset Manager at Financial Derivatives, talking markets, MPC decision yesterday.